Good, excuse me. Good morning, good afternoon, good night. Welcome back to the channel. My name is Joe Josh. I go by iChart Daily. Today is June 18th, 2024. And in today's video, yes, I'm going to be giving you a Bitcoin technical analysis, but I'm going to try and drill something into your heads because it's the most important thing if you want to become a trader. First things first, this is not financial advice. This is for educational purposes only. I've been doing technical analysis for 17 years. I'm just trying to give you a window to my thought process, cuzzies. So, I say this in every video for literally 3 years now. Long-term trends predict short-term outcomes. If you don't master this, I can't help you, bro. So, I'll say it again. Long-term trends, longer time frames, will predict what shorter time frames do. What that means is, and I say this again and again, you need to find the time frame on the chart that you're looking at. Scroll down, look at the entirety of it. So on Bitcoin, it's the 3-week and the monthly, right? Where when you had multiple either bullish or bearish confirmations that all lined up to confluence, it was the top or the bottom of major swings. And then during those swings, when you evaluate that time frame, you figure out if it's bullish or bearish, and then if it's bullish, we're buying at support, we're selling at resistance. If it's bearish, we're opening up shorts at resistance, taking profit at support. The reason why I say that is one of the hardest things for you to figure out is how much liquidation, where should my stop loss be, when should I take profit. A lot of those variables are eliminated from the equation if you don't bet against the grain. Let me explain. So you can see here on Bitcoin's chart, and by the way, it doesn't matter the ticker. It doesn't matter the news, the founder, the circulating supply, the real life problem they're trying to fix, how many coins have been given to this one and that one to be burned. If you could figure out the long-term trend, you'll be very successful. So let's go bearish first. What do I mean when you get bearish confirmations? Bearish confirmations on longer time frames are the same on shorter time frames. They just hold more value. Number one, a death cross. A death cross is when your shorter time moving average on the MACD, which in my case is the color yellow, goes below the longer time moving average. This is a momentum indicator, and it just gives you a visual that poo-poo's hitting the fan and price should be coming down. Things are looking good. Maybe we should open up some longs. Things are looking bad. Maybe we should open up some shorts. Things are looking good. Maybe we should open up some longs. Things are looking bad. Things are looking good. Things are looking good. Things are looking bad. Now let me justify that with the price action. Right here, right, even if you were to wait until 48,000, so it would have went from 69,000 to 50,000. You wait for the death cross, which is confirmation number one. Confirmation number two is this beautiful RSI. Once again, we use a time frame on the longer time frames, which is the weekly, 2-week, 3-week, and monthly. And then you zoom down, right? You scroll down, and then you find zones, right? This looks like a zone for the tops. This looks like a zone for the bottom. And then you take a step back and you say, wow. So every time it death crossed and we did this, we had major blood. And then every time we golden cross and we did this, we had major gains. And every time we death cross and we did this, we had major blood. And every time we golden cross and did this, we had gains. And then we had blood. And then we had gains. And then we had blood. Then we had gains. And now we're here. And it looks like we're forming a top. And we're about to have some major blood. So you forget the news, forget the ETFs, forget the tokenization of the cryptos, forget about BlackRock and who's buying Bitcoin, forget about. I just showed you 12 years of history. Very simple confluence, very simple confirmations. Now, what hasn't happened is the death cross. RSI is usually the first mover. RSI meaning what we're looking for is the same pattern that has happened in the past. When you're bullish, your RSI stays above the moving average. It's almost like the same as the moving averages in the price, right? If you're using the 11, the 21, the 31-day moving average, your candles are going to be bouncing above your moving averages. Once your candles start breaking down into the moving averages and your moving averages start doing those beautiful rainbow patterns and transitional changes, that's it. It is a trend reversal. So as of right now, you can see we're right there. We're on thin ice on a time frame that hasn't lied to you. So if we break, right, and we come down, maybe we could come down, still be in section A, which is totally fine, come back up, and that's the most important thing. Do we form the confirmation of the first lower high on the macro, right? It hasn't happened yet. Bitcoin could stay flat, go back up, form this hidden bearish divergence, form a double top back at 70, 80, 90,000, whatever it is, and still remain bearish on the macro. Now, the point of this video was to eliminate and help you with some of those issues of taking profits, stop losses, etc., etc. So, during this time frame, right, when the sentiment is bearish, you've had the lower high, you've had the rejection, etc., etc. That has not happened yet. It does look like we could have blood. We could come back down to 38 to 45,000, and then we pop back to 75 to 85,000, somewhat like we did here. But we'll go into why we're talking here. Okay. When you're opening up a long or a short, the first thing you think about is, well, where should I put my stop loss? Where is the, God forbid, this goes the opposite way? How much am I willing to risk? Usually it's 5–10%, whatever it is. And I have a video of how much leverage I should be using. It lines up with where you should be putting your stop loss, and it all lines up with where is the last swing high or swing low, right? So here is the 3-week chart. You can see here we broke down, and all we're looking for, right, is right here is the pullback. Right here I would have opened up my short. Okay, stop loss would have been up here. Maybe it's a 2–3x leverage, whatever it is, very minimal. As the position goes, you could add more money to it, right? So here you go. You make your first pump. We go from 52,000 to 32,000. You're like, should I take profit? Should I not take profit? Well, let's just say you don't take profit, right? The position goes, let's just say, up 100%. Oof, back down to you're up, right? Because you opened the position at 50,000, but now it's at 46,000. You were just up 100%, and now you're up like 10%, right? But you look at the long-term trend and you say, well, I'm on the time frame that hasn't lied to me, and we're bearish and we're bearish. So we still remain bearish until this time frame shows me that it's going to bottom and then top and then go up to the other way, trend reversal, right? So you just keep the position open, and because you keep the position open, guess what? It goes from 46,000, breaks the low of 34, and goes all the way to 17. Now you ask yourself again, Joe, should I take profit? I mean, I'm up like 400% on this short play right here. Should I take profit? Should I take profit? Should I take profit? And you don't. You don't, right? Let's just say you don't. Now you check the 3-week and the monthly chart. You check the sentiment. Oof, look at that. We're in section B. We're in section B. It doesn't look like volume was about going the other way. It didn't look like we were golden crossing yet, right? It doesn't look like the trend is changing here or here. So what do? You lose a little bit of money. Your position goes from being up 400% or 500% down to 275 to 300%, right? Because it goes from 15,000 up to 26,000. But then guess what? You still hold the position because the long-term trend looks like it's forming a bottom, right? The volume starts going the other way. You start seeing The RSIs form hidden bullish divergence on the 2-week and the 1-week, giving you insight that this trend could be reversing soon. So one last leg, it goes from 26,000 down to 15,000. Your position is up, I can't even tell you how much, from a short from 54,000 to 15,000, and you look like a genius, and you would have had 1, 2, 3 opportunities to take profit. Now, let me show you the same scenario, and you think there's a trend reversal when the long-term trend still remains bearish. So, same wave. We go from 73,000 to 42,000. You're not looking at the 3-week. No. You're looking at the 15-minute, the 1 hour. You're seeing a bottom form. You're seeing hidden bullish on the 15-minute. Guess what happens? You open up a long, right? You wait for the blood, you wait for the major blood, you open up your long here at 35,000, you look like a hero, you're up 135% if you use a 10x leverage, right? And then guess what happens? The same thing that you did during this swing, you do during this swing because you have no process and you're not checking the long-term trend to justify what you're doing on the shorter time frame. So what do? You don't take profit. And because you don't take profit, because you think we're going back to levels that the news is telling you, your stop loss gets liquidated, you now go negative, and it's back to the drawing board, right? And then guess what happens? We have major blood. We go from 46,000 to 18,000. You're like, this is it, bro. There's no way. It's extremely oversold. On the 1 hour, is it oversold? And do you see a trend reversal on the 3-week? Not yet, right? Like we just spoke about, right? We were just entering section B. RSI was making lower highs, lower lows. We didn't break the moving average until December. That was all the way over here. So your shorter time frames, guess what? Got pinned again. That means you opened up another long from 18,000 to 24,000, right? You were up another 30%. And because you were listening to the news and not justifying your investments with the longer time frame, you didn't take profit because you thought there was more room to grow because you're looking at shorter time frames. And then guess what happened? You got pinned again, and your liquidation was basically taken, your stop loss filled, and you're down again, and the position made a lower low. Now you could use this theory on any single ticker, cuzzy. I can go to Ethereum, I could go to Tesla, I could go to NVIDIA, I could go to gold, I could go to the DXY. You want to go to the DXY? Let's go to the DXY. Totally different asset. I mean, this is literally the dollar, right? But guess what, cuzzies? Let's delete everything because I was looking at it the other day. When you have death crosses and golden crosses on the time frame that hasn't lied to you, let's go to it first, right? We were looking for something that has very minimal. Here we go, right? This is the 4-month, even the 6-month chart. Here we go. You start simple, right? Death cross, confirmation breakdown, DXY went from 117 to 84. Confirmation, right here. Golden cross, break of the moving average, use the moving average as support. You could have missed this whole wave here. Your confirmation could have been here, 91 to 118, right? Or actually, technically, here was the first one here. So you would have got in from 82, right? Because if you zoom in, you could see here, you were making the higher lows, right? One swing, higher, higher, break of the moving average, another higher low, right here. Technically, January 1st, 1996, what is when you probably would have been, yeah, $81, right? But the point I'm trying to show you is it doesn't matter, right? the video. All right, let's go to a monthly. Here you go. Okay. The video, great company, right? Went from 48 cents to $6.22. You know what didn't lie? When the RSI broke the 70, broke the moving average, went down to the 50, and you had a death cross, right? It went from $5.85 to $2.90. But guess what? If you would have opened up a long, or actually if you would have bought options on the video right here, when you had the golden cross and you had the double bottom, boom, break the moving average, golden cross about a month later, open up longs, buy options from $3 all the way to that level. Look at that, right? It was the top here, we came down, we went up. Look at that. It was the top again here, we came down, we went up. Look at that. It was the top again there, look at that. Top again there. And then guess when the blood happened? RSI broke the moving average, came down, used the 70 as resistance, lined that up with the death cross. NVIDIA went from $25.68 to $11.12. We had a golden cross. This is when you should start thinking about buying options, right? Broke the moving average right here, lined that up with the golden cross right here, March 1, 2023, from $19 all the way to 125. So, when someone says the video is on the verge of crashing, if it doesn't line up with the time frame that hasn't lied to me yet, your opinion means nothing to me and holds great value only to you. Let's go to a no, we're fine. We did a stock, we did the DXY, we did Bitcoin. It doesn't matter, right? It doesn't matter. Now, just to give you a quick technical analysis on Bitcoin, it doesn't look good. It doesn't look good for the short to midterm. Once again, I do think we have some blood. I think we have some blood back to 52 to 40 something thousand. I do think this is a double top. And the reason why I say that is we are now having a death cross on the 2-week. The next candle that comes in is the week of July. Once again, I just showed you every single chart. It doesn't matter. We have been bullish from here, right? We were bearish, 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 bullish, bullish, bullish. Now we're here. We have broken the moving average. We are now approaching the 70 line. If you remember, this is the same lingo that I was using about a week or two ago with the weekly. And I said, you know, we were bullish from here. We did this higher low, higher high, right? We broke this high. And then we made that first lower low. And I was like, That's that little boop, that little break in the windshield. You're like, it's not going to break now, but you should fix it. So here's the next lower high. We have officially broken the alert that I told you guys to set, which was this last low here. And what this tells me is we have room to bleed. If there's room to bleed on the longer time frames, you should be thinking shorts, not longs. And if your 2-week looks like it's forming also a head and shoulders, then that means you're going to have more red weeks than green, because long-term trends predict short-term outcomes, right? And then what happens if the 3-week death crosses, let's just say July 8th to July 29th, and the RSI finally breaks down? I mean, look how bullish this was, right? This is clear as day. You break, you have your pump, price stays flat, but you form hidden bearish, meaning your prices, your swings on your indicators are making lower highs, right? Lower highs, right? Lower highs, right? Lower highs. It's a trend reversal. The RSI is always the first mover of the two. So if you see this on the horizon on the 3-week, you see the 2-week about to break, you have room to bleed on the weekly. I'm scared to check the monthly. Okay, because once again, when certain things happen, it's not my opinion, right? And nothing bullish happens when these things that I'm pointing out to you happen. Now, what I do think is, once again, we do have blood. We come back down to the 42 to the 45,000 range, right? This major liquidation zone right about there. Okay, from there, and then you obviously could see major support there, right? Now, I lined that up with the weekly 21 and 31 day moving average because when I showed you those longer time frame confirmations on the weekly, it uses it as support and as resistance during these confirmations on the indicators that I explained. And you could see here we're on thin ice, bro. Like we made our first lower high. We still need to stay in section A, which I still remain somewhat bullish. Like we could still come down and stay in this area from the 50 to the 70, and we could have a consolidation, okay? The same way you had a consolidation from 14,000 to 7,000, right? 70,000 to 35,000 is the same thing. So the most important thing, though, like I keep saying, is this chart. Right now, Bitcoin's dominance, when we went from 15,000 to 70, Bitcoin's dominance went from 35 to 50. You could see here, let me turn off the moving averages because you always want to simplify it so you could see the levels clear, okay? You don't want too many lines. You don't want this being on your screen, okay? This is the, if you're sending me charts and it looks like this, I can't. I get vertigo looking at shit like that. So we're here, okay? You could see here major resistance is the 55 to the 58 level. You could see here we've approached the 56. Now, the next time Bitcoin comes down, if it comes down and Bitcoin's dominance comes down, well, the second wave that we could have could be, once again, I'll say this, I've said this 1,000 times, it could be our alt season leading into the end of the year into 2025. Also, if Powell ever lowers rates, that will help the market as well. So once again, let me give you a visual. Rounding bottom. Rounding bottom ends when we don't use support anymore. Now that we haven't used support, we're coming down. Officially, neckline of this double top lines up with right here. 60,000. You need to have an alert at 60,000. Next thing, weekly moving averages. We use the moving averages as support. Why am I saying that? Well, you can see here we broke the first moving average. We're going to confluence this bottom of 61,297 with the 21-day moving average. At that point, we could have a little dead cat bounce because you usually do. But most important thing is we don't break this high of 72 to 70,000, right? Right here. Okay? And we do something like this. We come back up, and then eventually what happens is we'll use the 11 as resistance. Then we'll break the 21 and head to the 31-day moving average. And then once again, you could see something like this, as long as we stay above the 50 line on the weekly RSI. The next thing I wanted to show you guys was the smooth hike in a Shi. The smooth hike in a Shi also gives you a visual to show you when things are very bullish or things are very bearish. Very simply put, they're candles, but it just shows you we're bullish. When they're pink, we're bearish. Right now, we are approaching them with a double top. If we were to break the 55,000, we could have more blood on the horizon to, let's just say, the 37 to the 30,000. One thing I will end the video with is the 2-week white line. If you remember from my old channel, we used this 2-week white line as major confluence to give us confidence to buy at 17.5, 15.5, and 13.5. Now 13.5 never hit, but we look like geniuses because we were still in the action, right? So can we come down, right? Rounding bottom forms the cup, the handle, sorry, the cup forms the handle. We do something like this, right? We come down to these levels here of 35 to 45,000. We form that higher low here around December to January. Election happens, we lead into 2025. If that's the case, this looks like a nice ascending triangle, which could come back to, let's just say, 71,000 or even higher, right, towards the end, mid or end of July 2025. But that's what I see. And then, once again, wishful thinking, this hopefully is the year when Powell decides to lower interest rates. That's my theory. I'm sticking to it. And then once again, during this session, Bitcoin's dominance comes down. During this section, Bitcoin's dominance also is coming down, but also going up. That's the video. Love you guys.